In one single day, the stock market wiped out the year's gains. We are now down on the year in the S&P 500, but we've been talking about the potential for volatility to increase. Well, welcome to that. We saw that today. It was pretty crazy, right? But it wasn't crazy for the most part because we kind of planned for this. What did we say? Well, we marked out this pink box as an area where we can be, heavily looking to buy into, and then also the 50-period moving average, which we didn't even get down to today. In today's stock market brief, by the way, that's what you're watching. I do this show Monday through Friday, 5 days a week. Today's January 27th. We use technical analysis to get a good idea as to where the market might be going. We actually mix it in with intermarket analysis. So we look at various other aspects of the market. In today's video, we're going to be looking at the structure of the current indices. Okay, and then we're going to also jump into like the daily and the 30-minute charts and then go over some stock market indicators. Got a lot to talk about today, so I'm going to just leave it at that. No commodities again, but just one take quick on commodities right now while I'm recording this. The aftermarket hours for some of these mining companies are going bonkers right now. Like First Majestic, it's up like 17% right now in the after hours, which is, I don't know if that means anything yet, but it might mean that something will be taking place here soon. Don't quote me on that one, though, even though you can technically quote me because I just said it. Let's get into today's show. All right, welcome back. Let's first look at the dashboard here. Okay, down 2% on the Dow, 633 points. I mean, the numbers aren't that crazy, but I will say that brought down for the year the Dow Jones to be down on the year. The S&P 500 is down on the year. I believe the NASDAQ is still positive. The NYSE's down on the year. The IWM, that's still up on the year as well. Maybe not the NASDAQ, but the NASDAQ 100 is still up on the year, I believe. I don't have it in front of me right now. And then we got the VIX down here. Holy moly, 61%. I tell you, when the VIX goes, the VIX moves. And then if you look at the sectors right here, just completely obliterated across the board. It is what it is. You had a couple of top performers, real estate, which I'm in one of those trades right now. Not doing too well, but it's so low beta. What am I, down $40 on this trade? Energy, I've been looking for specific stocks within energy because I do believe that these dips will get bought on an inflation type trade. And then utilities was even down, but it was more middle of the pack right here. And that's, somewhat of a sign that we could potentially see utilities still hold in a higher area there as far as relative strength goes. That's just the dashboard. Now, a couple things I want to call out as far as structure goes in the market. We're looking at the dollar up here, and then we're looking at the S&P 500, okay? Falling wedge, bullish, rising wedge, bearish. They've been this correlation down here. It's almost net -1, which means they do the exact opposite of one another almost perfectly, and you can see that in the structure of these technical patterns. We have a positive divergence in the RSI for the dollar, so something's going to give here, right? Are we going to see the dollar break out to the upside, which we've seen some strength today? I don't have the daily dollar chart with me today, but we saw strength in the dollar today. It wasn't a huge move, but it was still a positive move. And if you're trading the Forex markets, even a dollar move like today, it's still actually a significant move. And then you have the S&P 500 rising wedge, and we had some dark cloud coverage, which we'll get into, or maybe it was a bearish engulfing, and we'll get into on the daily time frame when I have a little bit more clear of a view. IWM, this was just a full outside trading day candle, engulfed the entire candle the previous day. So we had a hanging man and then this. But a couple things to note. We're talking structure here. Structure here, folks. Rising wedges bullish or bearish. Sorry, we're overbought here. Finally, this downticked a little bit, the MFI. So that's moving down. But we are still above the 5 EMA. So the 5 EMA still holding strong. Look at closely. It tagged it perfectly and then bounced up a little bit. So there's no technical breakdowns yet. We're seeing a scare, and it looks crazy, but there has not been a technical breakdown yet. Okay, so remember that, and we'll talk more about that in the show. But on the weekly time frame for the S&P 500, bearish engulfing pattern, or you can call it, it's a bearish engulfing candle. So it's basically where you have a nice big green candle, and then you have this candle right here that engulfed the entire body of the previous trading week. So this is a weekly time frame, and the week is still a lot of time to go in the week. All right, and right now we're holding at this support, and we're still above this support, and then we have the 20 weekly moving average too as well. So there's still a lot of support, folks. This could be the start of something big, or it could just be a little blip in the road to see even more of this just insanity take place, which we talked about insanity around GameStop, AMC, all these various stocks that are just being completely squeezed to the moon. While everyone's riding, that trip to the moon, I'm taking my profits and I'm riding straight to the bank, baby. Woo! All right, here is a just unstructurally sound NYSE Composite Index. Weekly time frame, we broke out of this resistance. Okay, rising wedge, we broke out of the resistance. Now we have an inverted type hammer. We still are disconnected from the 5 EMA 2 as well, so it still allows room for a reconnect. And then we have this negative divergence. So structurally speaking, it's not the greatest time to go long, but that doesn't mean that we can't go higher. It's just telling you, structurally speaking, we're at an area that's, you got to be very tactful with your trading and investing, right, at these specific levels. All right, then we have the SOX semiconductor. This makes up a big portion of the NASDAQ. I want to just show a bull channel. We were getting to the upper range of this, and then pow right to the downside. Evening star kind of candlestick pattern, right? Green candle moving up. Then we had this little shooting star, and then it followed through. I believe it's called an evening star. It doesn't really matter what you call it. We closed below the 5 EMA, and we're still overbought right here in the MFI, and we're kind of coming out of that overbought territory. Maybe we come back, test the bottom of the channel. The bottom of the channel is where the 20-period weekly moving average is. Okay, so there's still, like I said, there's still a lot of support around. Yeah, this was a big down week so far, but there's still a lot of support. So you got to, once again, be very tactful. You can look for these areas of support and do really good risk versus reward trades. Let's get into the indices, dailies, and the 30-minute time frame. So we'll start with the S&P 500. Look at this gray shaded box. That's just to illustrate. I should have probably put it lower, but in 2 trading days, really just 1 trading day, I should say, it went back and, went negative on the year, right? So all of these days, oh, you're so bearish, you're so bearish. Oh, see, everyone buys the dip, blah, 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 blah. As we're mapping out these levels, by the way, the trend line, look where it bounced today. What do you think? What do you know? Bounced there perfectly. But in one day, we wiped out all of those gains. That's a lot of trading days in one day. So this is what I mean by stair steps up, elevator down. And no, I'm not saying that it's going to continue to fall, but I am saying if it does continue to fall, you need to know the levels in which to purchase your next move, all right? That's very important. So we made way with this resistance, right? So this was, support at the time. Once we cracked really thoroughly below that, boom, we tested this trend line. The trend line still held as support. The lower Bollinger Band is still there, can act as support. If we start really breaking down, we have gaps that need to get filled. That can act as potential support as well. And once we get into the indicators, you'll see what I mean by, like, some indicators now are actually overextended to the downside, because that's going to happen. That's going to happen very quick on these downward moves, especially if they're aggressive. You get oversold territory on a lot of these indicators, and you're going to start seeing, in bear markets, when bear markets start, you see some of the biggest rallies take place. It's just like bull markets, you see some of the biggest, drawdowns. So, it's just how the market works. It's crazy. 30-minute time frame. I wanted to just call out a couple things here. This big gap down, and we had momentum more towards the downside. However, we have a positive divergence, all right? Oversold, lower, and then higher low right here. We have a hammer candle that's forming. I don't know how the futures market is participating right now, but you want to pay close attention to this little thing on the 30-minute time frame, because we start breaking back above it, we could potentially draw this out as a falling wedge. That means we'll just go right back up, probably go back to 380, tag into that 200-period moving average, and then, play it again to see where the price action might go. So, be careful here if you're, choosing to short, because it's overextended to the downside here. So we'll see how this plays out. I just mapped out a couple areas of resistance. So we have 375, and then we have 385.50 still. And then there's some noise in between this. But because of how the price action looked, I didn't want to map out too many levels on this 30-minute time frame. I'm going to be focused more on the daily time frame, more specifically going into tomorrow. Russell 2000, big gap down, saw some strength, saw more weakness. Where did we end up? Where did we tag? Well, we tagged to the 20 period, so the 20 period is still holding at this particular time as support. All right? I would imagine if we start seeing the 5 EMA close below the 20 period, we can see some more downwards movement, probably to 200 or fill this gap, or even the lower Bollinger Band. That would make sense. We had the price percent oscillator turning bearish, right? The negative divergence that took place right here on the RSI, we're starting to see weakness. But, like I said, we don't we don't know yet, and there's still a lot of areas of support. And when things, really pick up pace, I don't think that this by any means was too crazy of a sell-off at all, but it was still a big shakeup in the markets today. And looking at what's going on in individual names, there's a lot of cause for concern. So you just got to be awake. You got eyes wide open, stay sharp. 30-minute time frame, we mapped out this area. It was green yesterday. Support, okay, we broke down from it, came back to back tested it, closed back below it. All right, so we have this gap that we're going to be keeping an eye on going into tomorrow. If it gets filled, we might bounce from that area. Not a positive divergence and not oversold to the downside here. So, we'll just play with caution. I'd say 208 would be that support to around 207 so far. And we still have resistance above us, the 50 period and this red zone right here, even the 200 at that point. Let's look at the Dow Jones. Dow Jones had a pretty big down day, down 2%, 633 points. This one, we tagged the lower Bollinger Band. So this could technically be a swing low position. All right, so we were mapping out this trend line, which I can, this is pretty drawn out good. I may be able to move it lower, but you'd just be playing with, I would ignore that. So we did crack below it, but we did find support at the lower Bollinger Band. So this could technically be one of those like quick trade scalps. However, what we talked about yesterday was it wouldn't be good if the 5 EMA crossed below the 20. Well, that happened, and then we saw this big sell, this big drawdown. All right, and then the price percent oscillator is also spreading, turning bearish as well. So it's not the greatest, looking chart right now. However, we have some support in this area, this 29,250. We'll see, what takes place really tomorrow, but just a big down day. If you just look to the left of the candle, you can see it comes back to around 2021 there as well. So a lot of work, a lot of consolidation. And then we saw this early on and we said, it'd have to get above 31,250. And if it doesn't, it looks like it's going to start heading down. 30-minute time frame, we mapped out this falling wedge. Well, we gapped down through that. Huge gap down. Forgot to fill the gap right here with a gray shaded box. Okay, moved lower, back tested, headed lower, positive divergence on the 30-minute time frame. What does that mean? Well, we might bounce up from this point and we might go retest 306 and maybe even head higher. So let's keep an eye out for that. Okay, positive divergence. NYSE was a big drawdown too. We had the MACD, bearish RSI, trending below 50, cracked through the 5 EMA and the 20 SMA and this area of support. Look at the 5 EMA cross below the 20. That's bearish. It hasn't happened since, the 26th. We talked about this in yesterday's video, I believe. We have all of these gaps down here still. All right, so be mindful of all these gaps because gaps usually get filled, and this was just a bunch of air pockets. Hey, maybe the market's telling us that this could be the start to fill some of these gaps. That'd be a very aggressive move. I don't think it'd be in one fell swoop. I could be wrong if it does start heading lower, but I would imagine we'd see some crazy rallies back and forth before we fill all those gaps. But I could be wrong. I'm not trying to predict, that type of movement at this particular point in time. I'm just looking at key levels to buy long into because I don't think that the Fed is going to allow the market to get obliterated unless if everything that they do loses weight and support for the market, and then it gets obliterated anyway. So just crazy times overall. We just got to be very tactful. And if you don't like trading within these environments, but you still want to trade, all you have to do is reduce your position size. Play easy, okay? You want to be able to have a good day still and not be tied to your computer or phone and be like, oh gosh, I'm down another 100 points. Okay? You don't want to do that. You need to, if you feel nervous while you're trading, chances are, actually, I'm 100% positive. If you are nervous when you're trading, you have too much on the table because you shouldn't feel like that when you're trading. It should be boring. You should be bored out of your head when you are trading. That means you're doing the right thing, okay? All right, NASDAQ 100 broke back down through that channel. I kind of saw that coming, and we've been talking about that. Gap down, cracked below the 5 EMA, but look where it bounced from. The 20-period moving average, still holding as support, folks. Price percent oscillator looks like it's trying to cross down below us. We'll see if it does, but we're still back within this channel here. So structurally, it's fine. No red flags yet, but this was a pretty significant down day with a big gap down too. So we had the hanging man candle and we just got confirmation. So this could be the reversal type pattern that starts structurally changing all of this stuff in the markets. We'll see. Now let's match up with some indicators. Holy moly, the VIX. I knew eventually that this little tiny cupping thing was going to play out at some point. I thought maybe we might hit this little target pink box because we broke down. I've been thinking that we should fill this gap, but I want to talk about this just so people understand the VIX and why, we've been saying, and I've been talking about the market's going to, see volatility. The real reason is because the VIX in history has never held at these high levels before, like this for this period of time. It doesn't just sit in the 20s. It doesn't do that. Typically, you'll go down to like 15, and then you'll just be around that 15 range in a healthier, environment. But we've been just like historically at these levels, and the market's been going higher and higher and higher, and we're still reading high readings on the VIX. It doesn't make any sense. And then today, like, what the heck is this? just this nasty green boom to the upside. So whoever was long the VIX, long vol, holy moly, that must have felt nice. But let's be real here. Like I said, we're running into areas of support on the indices, and we haven't broken through. The VIX, it's running into areas of resistance. Okay? If you just draw a line across here, I should have did that. And then the RSI is moving into overbought territory. It doesn't mean that it can't continue and head higher. Okay, that's not what I'm saying. But what I am saying is, if you are in the profits or if you shorted or something like that, you want to make sure you're scaling out of positions, because it could easily flip back. The VIX goes up, it can come right back down and maybe back test this trend line. But we clearly, once we broke above this upper trend line, pow, through the roof. How was breadth in the market? Well, breadth was a big down day. So that was a big burst spike right there, minus 63, but still it wasn't like we saw here or like we saw here. Now, when we get to these low levels spikes, sometimes that offers up really good opportunities for moves to the upside. So if you just look, this is a low reading. This is 63.87, and you see it right here, and you just move up. That was on a big down move, and then pow, through the roof, right? So these technical readings are reaching somewhat overextended. So you got to be mindful of that. Now, we had the negative divergence here. We had the negative divergence there. And we've already called out and noticed that you can have a lot of breadth to the downside. So are we going to see a lot of breadth to the downside here? Well, we got to break through 3,700 on the S&P 500. We got to break through other key structures that we've seen on these charts to see a breadth like this continue to hold at low levels. As I see it right now, though, it's in an area that has previously came down to on a spike breadth, and then we saw it bounce right back. All right, and I'll show you on the BP charts too what I mean. But here on the null, still a negative divergence, and it looks like it's playing out subtly. It's very possible, folks, that this could be something like this, right? We came up, had that little scare right there, all-time high again, and then that negative divergence really played out right later on in the months to come. So we could be seeing something similar like that. Okay, that's always something that we need to be mindful of and just take note. Here we go for the breadth. Oh my gosh, it's finally below 90. The percent of stocks that are above the 200 period moving average. So it's been jammed up at high levels, and now we're starting to see it sink down a little bit, down to 88. Will that continue falling? Very well may. We've had a lot of overextended charts, so we'll see what goes on. Here's the Pring bottom fisher. And the reason why I'm showing this is because remember what we said when it crossed over, it went up higher and then corrected the move, went up higher, then corrected the move. Well, guess what? It crossed over, we went up higher and higher, and now we're seeing a corrective move. So right now this could head lower, but look how it's kind of leveling out right here. All right, so if that actually starts curling up and crosses back above the green line, that would be a signal for a bottom being put into this market. Now, it's not always 100% accurate, but it is pretty good at finding bottoms. You can see when it gets overextended below the black line, and the green line's even better. Should have put more time frame because you saw the March bottom. It was perfect. But right here, boom, it crossed over. Not at the perfect bottom, but then bam, to the upside, cross right here. It was right here, and then boom, to the upside. So it works pretty well, and we're still kind of trending downwards. So keep an eye out for this to be crossing, the blue line crossing back above the green line. And then we got the BP charts. I call this out on Twitter. If you don't follow me there, you can follow me there or any of these platforms. We are back to oversold territory. Oversold territory can hold for a while, okay? But also it's where you start looking for swing long positions. And we're running into areas of support. The structures haven't broken yet, so that's still the green light for doing some swing trades, folks. So it's not for certain that they can't keep falling, but it does offer the opportunity for good risk versus reward trades. Okay, you want to be tactful for here. You know, if you're hedging short and then you start scaling out on some aggressive moves, but you still want to keep a short, then you start looking for longs, because if you get bounces, then you could scale out of those bounces. It's time consuming, it's hard work, but it pays off, and you just have to be very, very, involved. If you don't want to be involved, I can't help you with that. Here we go. BP chart crashed through the roof there, back down below 50. We're reading 49, so 49% of the stocks on the Nasdaq 100 are on buy signals. So that's bearish. And then we went to oversold territory. So is this going to continue to stay oversold? It might. Look for a positive divergence, because if we start getting positive divergences like this, pow, pow, you see moves up in the market. So we saw that in the February crash, right? And then we saw, boom, positive divergence. Guess what? As soon as that was recognized, bam, bottom was in. Right here, positive divergence. September, that was right here, and then pow, we moved up higher. Yeah, we corrected, and then we went up higher again. So take note, these are oversold territories, okay? And we get oversold readings very quickly on drawdowns that are as powerful as they were today, which in the grand scheme of things, it doesn't look too powerful because it hasn't cracked through any of this main structures. So just really to wrap up my thoughts, look at, it might have been scary today. It was for many. Probably some people made some great money. Some people was watching their accounts like, oh gosh, I'm probably panicking a little bit. But for those that watch this show, you know that we never crack below the 50 period right here, so that we said that can be an area that which you can buy into. We're looking at individual indicators that still offer up good areas to put on some risk versus reward trades on individual stocks if you find them run into an area of support. And then two, the last thing I want to close off with here is we still have this as one of those like key targets that I'm looking at. If we get down to that range, I'll probably put in a little bit more weight, or a lot more weight, into the market. Okay, after hours, I don't know if this is what's taking place right now with the miners, but we're seeing stuff, like I said, ticker symbol AG up like 17%. I saw AAU, which I think that's already back down today, but it was up like 16% after hours a short time ago, and I think that's already been corrected, like I said. But so just a lot of interesting things taking place, and you got to just be very careful and look ahead into the future. It's like the game of chess, okay? You need to plan the next move, so when this noise happens, you're not left making a big decision in a moment of panic. All right, so that's all I got for you on today's video. Hope everyone is having a good week. I will see you back tomorrow.